Hi, Michelle. How are you today?
I'm great. How are you, Sarah?
Good. Hi, everybody. Today I have Michelle with me from Scarlet Thread Consulting, and we are doing part two, Know the Story of Your Numbers, Managing and Measuring.
Right.
I got that in the right order. So, Michelle, could you start off by just giving a quick intro of yourself and just for anybody who's joining us at part two who might have missed part one?
Sure, be happy to do that, Sarah. So my name is Michelle Williams, and I'm the owner of Scarlet Thread Consulting. I offer strategic profitability coaching, which is like a whole lot of words to say, I help you get your numbers right so that you make money. I mean, that's the big goal. I am a member of the Window Covering Association of America, and I've owned my own business for 16 years in the custom home furnishings industry. So I've done all the pieces and parts of the business, and then started coaching about 6 years ago. And so what I love to do is just work with creative business owners in the interior design industry and really help them dial in so that they can make money for what they do. I mean, we all work so hard creating beautiful spaces for people and great spaces. And I'm just a firm believer that if we're going to do all that and use our God-given talents, we should be paid for it. So there should be a really great exchange. And that's my goal, is to make sure that we're exchanging beauty and talent for money.
It's exactly what we need.
Yeah.
So more of you, so we can
Right.
continue to do what we love and get paid what we're worth.
Exactly.
All right. So today we're going to be hopping into a presentation that you've prepared for us.
Yes.
And so I'm going to let you take control and start your screen share and
Okay.
some questions afterwards.
Can you see it? Did it come up?
Oh, yes, we're all good. I can see your screen. So I'm actually going to mute myself just so there's no extra background noise, and then I'll periodically unmute myself and ask you some questions as you're going through the presentation.
Okay, sounds great. Thanks, Sarah.
You're welcome.
All right, so the first thing we're going to do, hold on. Can you hear me now, Sarah? You can just shake your head. Yeah, okay. I somehow hit mute trying to move a picture across my screen. So that was going to make for a really long time together if nobody could hear me. So again, this is me. I am a business coach for the interior design industry. I am a Profit First certified coach, and so I really help people use that Profit First method to make money. And like I said, I've owned my own business in the interiors industry since 2000. Jumping right in, the story of your numbers, chapter 2. So we talked about chapter 1 in the last webinar. It is out there, and you are welcome to go back and look at it. And in the first one, we talked about the story of your numbers, just that our numbers in our company are telling a story. It could be a horror story. It could be a love story. It could be a chapter book, chapter 1, chapter 2, whatever. And, we really need to read those numbers. They're telling us something. And so in chapter 1, which was the prior webinar, we talked about how the goal of our business is to be profitable. We talked about profitability being a choice. It's not something that happens to you. And then how we looked at being profitable in our time with efficiency and project management software like Mydoma. We talked about being profitable in sales, so we have to make money with the right products, with the right markup. And we talked about being profitable in the process. And today we're going to look at chapter 2 of the story of our numbers, and that is managing and measuring, because making the money is not enough, and that's what we're going to look at today. So we're going to focus on profitability being an ongoing string of choices. We're going to talk about how time and product affect our company profitability. We're going to talk about managing expenses, and again, how profitability is not just about sales and why we should measure our numbers. So that's just kind of an outline of where we're going to go. I want to start, though, by just reviewing why we need to make a profit. Many of you probably, if you've been in business any amount of time, you've probably been in a position where you didn't always make profit. And when I show you the next slide, you're going to understand why it is so very important. Because I've lived in a business, written the first chapter of a business that wasn't profitable. And I can tell you, it wasn't a good thing. Once I became profitable, I can tell you my entire level of joy and passion shifted for the business. So let's start with why profit. The first is to cover the tax debt. Anytime we're in business, and I'll just let you all know, I'm in the US and I know Sarah is in Canada, and I know some of the rules are a little different in how we handle this. But quite often we have taxes that need to be paid on our salary and on the money we make. And so by having a profit in the company, it allows the company to pay the tax debt and it not just be taken out of your salary. So if you need a certain amount to come into your home to run your family finances, the additional amount can come out of the business to pay your taxes. Now, it's still going to be counted to the government as your salary in most cases. It's just that that amount is there to be paid. One of the things that I've seen, especially since we're right out of tax time here in the States, is that self-employment tax. I've really seen that be a big deal because it is determined based off the net profit on your profit and loss statement, not on your salary as it's been adjusted with all the exemptions taken out. And so in the States, our federal and state taxes are on, all these adjusted numbers, and that's not the way it is. And so that is a really high number for many of us. And if we're not saving and planning for that, it's going to hit you hard. The other reasons that we want to have a profit is to create and maintain happiness and joy. When we're being paid fairly, that fair exchange that I mentioned in the intro, when we've got that going on, we're able to be happy and we're able to do great work and not feel so terrible like we've been taken from. Profit allows us to have a sustainable company and then to grow the company. We don't have to worry about, I can't give customer service. I can't go out and do this, or I can't go the extra mile. Because if there's no money and you're barely breaking even, or you're scraping by for everything, we're constantly chasing the dollar, and that never puts you in a position of being able to give service out of an abundance. Profit also allows us to spend more time with our family, with our friends, and then of course to sleep at night, to reduce stress. And we could talk about this for an entire webinar all by itself. But suffice it to say, profit is necessary. It's necessary. And we're talking also here about a profit above and beyond what you're paying yourself in a salary. So if you were to come to me and tell me that you're profitable because you made $1 the whole year on your P&L, I would tell you that's not really profitable if you didn't pay yourself a salary. So if you paid yourself a great salary and had $1 profit, okay, now we can talk. So I just want you to keep in mind this is different from just what you pay yourself for salary. Profitability is a choice. It is a decision. It's an outcome, if you will. Profitability is an outcome. It's not a one-time thing. And every single choice we make moves us closer to or away from the goals that we have set. So if we have set a firm goal for profitability that we want to make X percent of total sales and profit, or a number, everything we do should lead us to keep our mind on that number. If we don't do that, then it's very easy to be led astray, to think we need to spend money in places that we don't necessarily need to spend money. And profitability, as I'm going to talk to you about again today, is about more than money. I think that was a big aha for a lot of people as we have these conversations, that it's not just what is the number at the end of the year. We make profitable decisions every day. Our hiring, our firing, our processes internally, the technology that we choose, all of that we're going to see leads to profitability. So again, it is about more than the numbers. If we think of profit and we only think of numbers, we're going to be in a bad position or a limited position. Okay, so I want you to expand your idea of what it means to be profitable. It's comprised of SMART goals with clear action steps. So again, if you keep that idea in mind, that every step we take is taking us towards where we want to go or away from that, then when you create these SMART goals, which are specific and measurable, attainable, realistic, and time-bound, and you create these goals that are very, very clear, that's what that very first S is for, very specific. And then you create, sub-goals and action steps and tasks, you're able to actually attain the profitability that you want one step at a time. And you know what? We don't always see how our choices are adding up, but they do. I was even thinking about this this morning again when I was thinking about preparing to share this. If we're not careful, we almost dial profitability down to whatever is the number at the P&L at the end of the year, okay? And that would be almost like saying, if you were a college student, that it wasn't all those courses that got you to the GPA. It's just, what's the GPA? But it's every course for 4 years or whatever your collegiate timeline is. It's an accumulation of every decision to study, every decision not to study, every decision to take a class, the time of the class, whether you showed up or didn't. It was all those choices for 4 years that comprised the outcome of a GPA. And it's the exact same thing in a business. It's all the decisions for the entire year that affect the outcome that shows up in your profitability number. And so you have to really think about those goals. You got to think about, in terms of a college degree, what classes do you take and when do you take them and what order you take them. It's very, there's room for movement, but there's a systematic approach to it. And I would tell you that to be consistently profitable in your company is the same thing. Very smart goals, very clear action steps, knowing if you've achieved it, and moving day by day, step by step to get where you want to go. That's also why part of that M is the measuring part, right? So it's specific and then measurable. That means that any goal we set, somebody should be able to come in behind us, read the goal, understand it, understand every action step to get there, and be able to repeat it. And so that happens by checking in and looking at the goals and the tasks and the outcomes, monthly, quarterly, yearly, whatever, based on the goal. And so just really keeping your eye on the fact, on the end game, and then also all the steps to get there. It's a conscious choice every single time. I've rarely seen profitability happen to somebody by accident and then repeatedly happen by accident. So I'm just, if anything, I would tell you that this means the beauty of this is that you get to own the choices that you make that lead you to be profitable. And if you are very systematic about it and very thoughtful about it, you'll be able to repeat it year after year, which is always the goal, right? Not to have one great year and then every other year stink behind it. So it's also comprised of informed decisions with relevant data. So what this means is, you remember on the specific, measurable, attainable, realistic, and timely, we got to have good data to go into that goal setting. And I have worked with many companies that came to me and asked me, hey, could I buy this building? Can I move out of my home? Can I open up a new product line? Can I do whatever? Or can I hire a new employee? And I say, well, let me see your financials. Let me see where you are. Well, they haven't been updated in 6 months, or I haven't updated them from last year, or I'm 4 months behind on reconciliations. And I'm thinking, how in the world can I tell you if you can afford to do something monetarily if the numbers that you're looking at you can't even trust? And so the data has to be relevant and it has to be updated. This could be just the case as well with your marketing and your advertising. If you're trying to figure out, hey, I've marketed over here with this company. Is this a good idea? Is it profitable? Well, we have to keep metrics that says I've marketed over here. Here's what it costs me, time, effort, energy, money, whatever. Here's what the return on that investment is. If we can't do that, how do we know if it was profitable? So again, this is about more than just money. It's thinking about, are we able to have the data that we need so that we can make an informed decision to move us closer to our goals? So this could be in your HR and your employment. It could be in your client relations, vendor relations. It could even be with travel and entertainment. I get this question like, hey, Michelle, do you think it's worth it for me to go to market? Okay, well, let's define what worth it to you means, because worth it could be very different to many companies. What is your plan? Who do you want to see? What do you want to get out of it? How much is it going to cost, and how much money do you have? If you're not even able to pay yourself and you can't make your bills, the last thing you need to be doing is hanging out at High Point when you can't make your bills. So, somebody else, it could be an excellent decision, and for another client, it could be a bad decision. You have to have good data to be able to have good decision making. Profitability is also comprised of a good use of your time, electronic, human, and financial resources. Anytime we have an efficient process, that's one that we can make money on because we know what's coming next. We also make money on that because it's repeatable. We know what's coming. We can plan for it. We know the outcome. The right employees is so important as human resources, and not just the right employees, but the right employees doing the right task at the right time. Timing could certainly come into play. And I've seen some companies where they had the right talent, but in the wrong position. And so that was hurting their profitability. When we can take that human capital or that human resource, that employee or assistant or subcontractor, and we can find out what they're really great at, and then put them in a position that allows them to thrive there, not just survive in that position, but to thrive. It actually increases, their ability to work and to get things done, which creates more profitability for the company. It also makes them feel like they're more of a team, and so they want to work harder. And just really spending time thinking about how all of this affects your final outcome. Another thing is, thinking about the money that you spend, and is it spent wisely? Did I write the check for the correct thing at the correct time? Just like with your human resources, we have money in the company, and that money can be spent in a multitude of ways. And so really telling every dollar where to go and what to do is important. I have just taught the Dave Ramsey Financial Peace University, and as I said, I'm a Profit First coach. And one of the things that both of those systems of money management teach is that you happen to your money. You tell the money where to go. You don't wait and let it do whatever it's going to do and be taken from you. You make a plan, and then you allocate resources. That's what we need to be doing with all of what we're doing here. As far as some of the electronic resources, that could be your use of, Google Docs or Office or QuickBooks or Mydoma. These are the things that you use that, again, help you become efficient, help you streamline your processes, and then that leads to profitability for you. Profitability is also comprised of measurements. We hit on that a little bit at the earlier slide, but this is about running financial reports, running the reports that show you where you are and knowing what it is you're looking at. It is not enough, and this always makes me, almost shake my head and giggle, but I've been there and done that. I'll have people that I'll ask them, so have you run your financial reports? And they're like, oh yeah, my bookkeeper runs them for me every month. I'm like, great. So they're great. They're great. And then I go, oh, okay. So are you within the profit margins, or did you, is your cost of goods where you think it is? And I'm like, oh, well, I don't understand the reports, but I looked at them. They were run, they were sent to me, and I looked at them. They check off the box and move on. That's not real measurement there. That's not what I'm talking about. I'm talking about setting a goal that your gross profit will be 60% of your total sales, looking at the report every month and saying, was I 60% of total sales this month? And if not, why not? What happened? Where am I? And do my internal processes support me being able to make a 60% gross profit margin? If not, then there's something else I need to change, right? Or is it that this was just a bad month, but if I were to look at all the months together, I'm still within a 60% overall? It's those kinds of things. So it's being very clear on your measurements, looking at the profit metrics of your marketing again. Usually I want 3 times investment. So if I invest 100, I want to make sure at a minimum I get 300 back. And so knowing over what time period I want that to happen and how am I going to track and know if it came in that way. And then again, just looking at efficiency metrics for employees. Maybe you have an employee that's creating a floor plan for you, and you know that, 30 minutes per floor plan, you've got 3 floor plans, and so an hour and a half they should be done. And if they're taking 4 hours, then you know that there's probably some training that needs to take place or something that needs to happen. I see that a lot. We have, I think I've shared with you, we have multiple currencies, but the 2 main currencies that we work within are time and money. And time is money. And so we have to tell every hour where to go and every dollar where to go. And not in a control freaky way, but in a way that just says, I'm in control of the resources that I have for my company. I know we work 8-hour days, or I know we work, you know, 4 hours in the morning, we take a 30-minute lunch and we work 4 more hours, whatever it is you do. And then being very careful in how you allocate that time. I know when I first started, I just was excited to have work coming in. And so I just kind of worked whatever came in, whenever it came in. I might move even from task to task to task. And Sarah and I were even talking about this before we came on the webinar today. And I realized very quickly I was constantly changing gears in my mind and in my work all the time. I might be running out to an installation and then turning around and doing a consult and then turning around and trying to make a cushion and then running back out to do the next thing. And I never felt like I was in my groove. And when I started measuring my productivity, I realized that. So I moved to time chunking because I wanted to be profitable with my time. So by moving to time chunking, I have all my consults at one time. I did all of my fabrication in the drapery workroom at one time. I went out and did all my installs, you know, in 1 or 2 days, so that I wasn't shifting mental and physical gears all day long, because that just chews up your productivity and that cost. So again, it's thinking about profitability as about every choice that all combines to get you where you want to go, and being able to measure that. It's comprised in the consistency of the product and the service and the inspection of tasks. What do I mean by this? So if I were to send you out, I love this analogy because it actually happened to me, but if I were to send you out to my favorite restaurant to have one of my favorite meals, okay, and I said, I want you to go, and this is exactly what I want you to order. Now, I live in the South, and one of my favorite meals ever is shrimp and grits. Don't knock it till you've tried it. It's delicious. I've eaten my way through the South eating shrimp and grits, but every company makes it differently, okay? And so let's say I told you I want you to go to Village Tavern and I want you to order shrimp and grits because it's phenomenal. And you go and you don't have that same experience because they were not consistent with their product or consistent with their service. Then number one, you're going to come back and go, that is not as good as you said it was. Or you're going to come back and you're going to question now any other recommendation I give you. Now think about this in your company. If you are not consistent with the product that you put out, you're not consistent with your service, your clients are going to notice and they're going to say something to you. I've worked with quite a few designers that their business takes off, which is fantastic, right? Their marketing explodes and the phone is ringing. But then what happens is their service levels start falling because they maybe weren't prepared, or they need an assistant, or then they're kind of putting things together quickly and trying to get it out the door, as opposed to kind of limiting the growth and having it happen maybe a little more slowly, organically. And so then what they do is they forget to inspect things, and then things get missed and they get left off. Or they just don't have a full process. They're not using Mydoma. They're not using project management. They're just by the seat of their pants going. Well, that client's not going to keep calling you. And the more you have to go back out there to fix or to correct anything that was missed or done wrong is eating up your profits. You've seen it. If you've been on any of these Facebook groups, you have seen designer after designer, creative after creative, talk about how they're losing money on a job and how they missed something or how something fell through. It happens, right? It happens to all of us. But if we can create a process, use software, use, the tools that we have to manage that, it's going to stop it. One thing that I learned very, very quickly, especially when you're delegating tasks, which can increase or decrease your profitability, you probably have examples of both, is that you get what you inspect, not what you expect. And I say that because I've seen quite a few business owners delegate to their employees or their subs, and they didn't fully explain what they wanted, and they didn't go back and make sure that that's what they were getting. And when that happens, when you're not looking, it can show up in a different way than what you were expecting. But if you are inspecting it enough, then you're going to get what you want. But if you're just expecting it to show up and you never really gave firm direction, that's not always going to happen. And that's where the profitability takes a hit. So inspection and measuring is really important. So let me stop right here. And Sarah, do you have any questions that I can answer up to this point? And then we're going to jump in and I'll tell you a little more how to tell if you're profitable.
No, I don't think I have any questions. I just have comments that I
Okay, sure.
basically love. I love all of this. Like just profitability, being a choice. It's all about decision making, how you use your time. Like it seems like such a simple concept, but I think if you're not aware of it, like I don't know, like it's so simple, but yet so incredibly powerful, and impactful to your business.
Yeah, you know what? I would say it's very easy or a simple concept, but it's not easy in practice to support what you're saying. In other words, we kind of have this idea, but then we don't do sometimes the easiest things in front of us. Um, One thing that I've heard a lot of is, well, I don't have time to do all this. And I would push back and say, you don't have time not to do all of this. This is the discussion between significant versus urgent and important. And doing some of this work up front is significant enough because it is going to clear your schedule and clear the time going forward. If we don't do some of this pre-planning of what's going to happen or how we're going to do these things, then we're always in the reactionary mode. I'm
Yeah.
sure you hear that a lot.
Oh yes, very much so. Reactionary. Like you have to be proactive, right? Because your story about how seeing designers like take off and have their businesses grow really quickly, but then their processes are falling behind. That's like my biggest fear, right? Like it's a good problem to have that you're growing so fast, but if you're not ready for it, it could destroy you. Like,
Absolutely.
right? Bad
Absolutely.
reviews, books are a mess. Like that's nobody wants that. I mean, so like I'm a big believer in being proactive and setting processes up front, whether you're using us or something else, us being Mydoma, obviously, but, just making sure that you have everything lined up and ready to go.
Right.
Set yourself up for success. Invest in your business now.
Absolutely. I thank you. To me, it's super important for us to have our foundational pieces in order, and then you can build on that. Both my sons are in construction. One's a project manager for a major construction company in our town. And, it's super important. If that foundation is shaky, if it's got cracks in it, and you start building up, which in our world is more clients, bigger business, it's going to crumble under you. And I spend a good amount of my time helping designers make sure that they've got all those little pieces and parts, all those cornerstones for the building of their business in place, so that when that building grows, when that business flourishes, they're able to handle it. They're able to grow smartly and not have to shut the doors. And it's not because they don't have work. It's almost because they have too much work and not enough process. Okay. So profitability here is about all of that. Let's shift now into how to tell if you're profitable. So here are just a couple of things. Now, these are not numbers based. These are just for you to think about. Do you have great clients that pay on time? Believe it or not, getting paid on time affects your profitability. I met with a client this morning who was doing some commercial work and had a $20,000 bill that was outstanding for 8 weeks. Let me tell you right now, granted it came in later, she made it, that will kill your cash flow. And so that not just great clients that pay, but that pay on time, that helps you stay profitable. Another question, do your employees and subcontractors get paid? So not only do you get paid as the company, but are you able to pay those people that are working on your behalf on time? When I have people that do not pay me on time, it makes me question their cash flow and their financial stability. If somebody tells me they're going to drop a check in the mail and then a month later I have to reach out, or 2 weeks later I have to reach out, that's telling me they're probably pushing back for a reason. Okay. And so that's a big flag. I always, if I owe somebody, I want to pay early or on time. I don't want it to be late. Are your employees and subcontractors easy to work with? Because if they're not, it's costing you. If you tell me that you have a terrible installer or that you are fighting with this subcontractor, I'm going to tell you, even if they're cheaper than their peers, that costs you more. It costs you in effort, it costs you in energy, it costs you in joy, and ultimately that's going to show up in the the numbers of your business. It's just not the story you want to tell. Let's talk about vendors. Do you have really great vendors who support you? We all know there are mistakes. We're going to make them. The vendors are going to make them. We're all human. But do you have vendors that are going to stand up for their product and stand in that gap? Reps who are going to stand in the gap. That's going to help you all be profitable. But if you are working with vendors who are throwing you under the bus and who are not supporting your business and not making up for their own mistakes and trying to work as a group, I would suggest that you stop and reconsider that relationship. You know, we all have to pour grace on mistakes, on ours and on others, but we should all be working with the same goal to make our clients happy and to give them great product and great service. Okay, so now I'm going to meddle a little. And the question there is, are you able to take a steady salary and pay your taxes on time? That to me is the number one. And when I say a steady salary, I don't mean $100, right, a week. That's not a steady salary. That's $400 a month. That's play money. That's not a salary, right? That's what you couldn't hire somebody to come in and do what you do for that amount of money. So I'm talking about, are you paying yourself a fair and reasonable salary and able to cover all the tax burdens on time? If so, that tells me that you are awesome and that you're profitable. If you don't even know what those numbers are, then we need to talk. Do you have money left in the bank at the end of the year? You know, we're not working down to $0. Now, I don't mind us having a $0 budget, but that should be with a profit account where we can move some money out to save. There is nothing worse than starting January with no money in the bank. That then means that your decision making towards profitability is hampered in the new year. And so we are constantly having to think about that cash flow because it flows in and it flows out. And we want to make sure that the in is a little bit higher or a whole lot higher than the out. Okay? But we have to manage and look at that all the time. Another way to tell if you're profitable is to look at each job that you do and ask yourself if you made a gross profit after you've paid all the materials, the cost of goods, all the subcontractors that you have to pay for that job. When you have taken all that out, is there money left over? So if you look at the screen in front of you, it says total. This is like an invoice total. That's the invoice that goes to the client for either your hours billed or product purchased, both together, however you do that. You've got this total amount. Then we're going to subtract the cost of goods. Okay, so that is the product or you know, anything that's going to that client. It could be a sofa, a chair, the console, lamps, rugs, art, whatever. Then we're going to subtract the subcontractors. So if you had to pay your drapery workroom, if you paid the installer, anybody that you would have paid as a subcontractor on that job, what's left is a gross profit. And that gross profit on collectively from all the jobs that you've done all year is the money that we will use to run the company. So in profit first methodology, that's called real revenue. That means that's the real money that we have to run the company. Because the total up there that you invoice to the client, that's not what we have to run the company on. That's the money that we have to take out all the product and service, the subcontractors and the cost of goods. What is left is ours to use to run effectively the company. Okay, so the first question is, do I have a gross profit? If that number is negative or zero, I can tell you everything else in your business is going to be negative or zero because you're going to have money to run the company. So if there's no money there, you're in trouble. So let's look at Mydoma for a minute. If you look just at this particular product level, right? So we're looking at this tripod lamp. Notice right here, the price that they're going to charge is $1,000, but the designer price is $500, and they're ordering two. Okay, so you have a total for $2,000. If you look over here, you can see the invoice to the client would be $2,000. Of course, if there was tax and all that, it would be added in. But the total of the product is $2,000. You have $1,000 in cost of goods, right? So that's 500 times 2 right here, the designer total. What's left is $1,000 in gross profit. So this is the money that would then go into the company to run the company. So this is one way you're going to see. If you were to show me something that had designer price 500 and then it had price 500, then it would be 500 minus 500 is 0. That means you're taking no money from all of that product to run your company with, and that's a problem. If you look at this report out of Mydoma, This is invoices per project, right? So these are all this is the project, and these are the invoices that come in. You can start to see how much money you're making subtotal for this particular project. This is the information that you could then use to feed into QuickBooks or FreshBooks or Sage or whatever accounting software that you use. Because the one thing that you all know is Mydoma does not offer is your full company financials. That's not what it was meant to do. And I've told Sarah a couple times, I'm glad that they're not doing that, because if you're going to do it, you got to do it all. I would rather Sarah and her team continue to do what they're doing really, really well, which is managing, the front end and the income for products and services for the interior designers. But you can easily take this information and transport it and move it into your accounting software. Corey Klassen has a really great process to feed information into QuickBooks for income and cost of goods. I know he wrote a really great little step-by-step out in the Facebook group for Mydoma, and he and I are going to hopefully get together and be able to bring you even more detail around that. But I just want you to know there's information in here that is going to feed into your accounting software that's going to allow you to get a full company view, not just a product view. Product view is important, but full company view is equally as important. And that's the information that will then go and feed into your taxes, into your accounting, okay? Here's another report from Mydoma. This is like a product report. Notice let's see, which one was I looking at? Notice, right here, even here, $599, they're not marking it up anything. So they are taking just a small discount, which is probably from a retailer. So they're not getting much money from that. That's all that's running out to pay the company. That's all that's falling through for company expenses. If you look at some of these where there's a markup, you can see here that this is the money that falls through. This is the real revenue. This is the profit. This is what's going through at the gross profit level to run your company. I'm going to tell you that if you want to make money in your company, you got to do two things really well. Number one, you have got to make sure that your time is charged for it, whether it's hourly rate, flat fee. I've got clients that do every type of billing strategy. I don't care what it is, but it's got to be monetized. You monetize your time, you keep up with your time, you're honest about your time, you're going to make money on that. And if you make sure that you use the best buying power possible to buy product to sell, and you mark it up, you're going to make money at it. But if you're running around trying to buy everything retail and take this little measly $18 and $89 on a product that it probably took you an hour to run around town and pick up, and then they don't like it and you have to take it back, you're going to struggle to be profitable and manage your business that way. I know that sounds harsh, and I don't mean it to be that way, but if you can buy from a stocking dealer, if you can buy from a purchasing agent, if you can buy as low as you can buy and then mark it up, you're still going to be within the realm of reasonable pricing. You add that to really charging for your knowledge, for your expertise, for your experience and your time, and you value that properly, there is no reason, if you do a great job and you've got a good marketing funnel, there's no reason you can't be profitable. If you're not profitable and all those things are happening, it's going to come down to the next thing, managing the money. And so then again, what we wanted to look at, a minute ago, we looked up to right here, right up to this gross profit. So we looked at all of your income from your products and services, minus all the cost of goods, minus the subcontractors that are working on product-specific or client-specific needs. Take all that out. What's left over is gross profit. It's what we're going to use to run the company. Then we have to subtract out the expenses to run the company. And then the money left over is net profit. If you are, well, let me go over to the next slide and then I'll show you. If you are an LLC or a sole proprietor, then the money right here that's left over, this net profit, that is the combination of your salary and company profit. If you are an S Corp and you're paying yourself through payroll, then your salary is going to come out up here in the expenses of the company, and this money left over is just going to be company profit. But I will tell you that the majority of the business owners that I work with are sole proprietors or LLCs, limited liability companies. And in that case, you're looking at this right here, all of this. And this is company profit. It also includes your tax, any taxes that you have to pay, your salary, everything. And so if this number is not what you want it to be on your profit and loss statement, if you don't even have a profit and loss statement, then this could be problematic, right? Let me show you an example. This is an extremely simple income statement. So let's say that we had total sales of $100,000. That's awesome. Great. You've sold $100,000 of product and service. Your cost of goods are $40,000. Fantastic. Gross profit, $60,000. Love it. 60% gross profit margin. Like it. Your expenses are $18,000. Your net profit is $42,000. So then that becomes your profit and your salary for that time period. Okay. Notice right up here what I wrote over to the right. Your total sales, the goal is to bring in as much as you can. We want that number high. You can see how here, this number of $100,000, this is not your profitability number. This is your profitability number, the net profit, right? So you're bringing in 100,000, but you're only making 42. That's why I hear a lot of designers say, I can't charge X amount. I don't know that I'm worth that. Well, you're not charging, let's say it's 100 an hour. That 100 an hour is not for you. Please don't get confused. That 100 an hour is for the company because it's going to start up here and it's going to flow its way through. So you're only going to potentially get a percentage of that $100 an hour. I mean, that money goes to be actually used for a lot of these expenses in here. Okay. And so it's just really important to bring in as much as you can, but to know that sales is not the only indicator of profitability. Sales number being high tells me you're a great salesperson. It doesn't tell me that you're great with managing money. I've mentioned in a couple of other podcasts, I've had people that are making $3-4 million a year and losing 100,000. I would tell you, I don't think that's great managing of money. Not when I've got somebody who can sell 200,000 and 300,000 and come home and make 75 to 100. That's good managing money. Okay, so don't get confused here. A lot of sales programs tout this number, but this number is not the one that pays you. This is the number that pays you. So be a good salesman, bring it in, and then manage it. That's the key. Bring it in and manage it. Here's where we want to keep the cost as low as you can. Notice what I said here, while matching your value proposition. In other words, I don't want you to put in, items that are less than what you would put out there. I don't want you to put subpar product or subpar service or maybe you're a relationship buyer, so I don't want you to feel like you got to jump from person to person to buy or vendor to vendor. That all of that may not match your value proposition. But what I do want you to do is to be very conscientious of how you spend your money and how much you're marking it up and what you're making. So of course, gross profit, this right here is your real revenue and profit first terms. This is the money we have to run the company on. This was sucked out with product. This is what's left. So if you take your gross profit, now what we have to do is we got to pay expenses. We got to pay all of those things that it takes to run the company. You got to pay for your advertising. You got to pay for your website. You might have to pay, your accountant or your bookkeeper, or to take an educational course or to go to High Point or whatever it is you choose to do to run your company. And then what's left over is your net profit. So what are some things that would be considered overhead expenses? And that's the things that would show up in this $18,000 bucket. This is looking at it from a full company picture, right? So this is when you take all this income, your total sales, your cost of goods and gross profit, all of this comes out of Mydoma. When all of this comes out of Mydoma and goes into your accounting software package, which again could be Sage, FreshBooks, QuickBooks, Xero, they're all kinds. I prefer QuickBooks. But once they go over there, that's when you would then enter all your bills from your vendors, or the ones we're going to look at in a minute. I'll show you what those are. You're going to enter all your bills, and that's where this $18,000 is going to come out of it for you to be able to keep up with the 42. And that's what's going to create your profit and loss statements. So those overhead expenses are things like your phone, your internet, your cable, your advertising, education, travel, insurance, utilities, rent, payroll, meals and entertainment, office supplies, and the list goes on and on and on. We all know that running a company is not just selling beautiful things. There's a lot more to it. And this is where the lot more to it gets a number assigned and it comes out as an expense of the company. So look at this one, for example. So this is a simple income statement, again, a profit and loss statement. It's that same company, and they sold $100,000. Their cost of goods was 40, and they have 60,000. Do you know why this happens right here? Because they usually think they need an assistant to help them, or they think they need to pay for rent and move out of their home, and they don't really have the money up here to support that. And so this 58,000 is not on a sole proprietor, an LLC. This is not with them getting paid. This is them paying for other things. So they're either paying for marketing, they're paying for rent, they're paying either employees or subcontractors, at their level, not necessarily those that can be billable. They're paying for somebody to run around and help them, but they are spending the money that the company's making, and then all that's left over at the end of the year is $2,000, 2% of total sales. This is not profitable because that's their salary and their profit. And I don't know anybody that would work an entire year at the level that we work, doing the heavy lifting that we do, for $2,000. I talk about removing the joy and stressful nights. That's cutting it way too close. I have been there and done that, and it is not a good feeling. And so you can see easily the difference here between managing those expenses and, how do you measure that? What do you look at? Well, some of the things you're going to do, let's talk about why measure, and then I'll tell you about where we're going to do it. You need to know where you are at all times. This is why I really am in support of having an accounting software package that you work with alongside Mydoma. You can take out the invoice, you can use Mydoma to its fullest, let it do what it does really, really well. And then you can extract those invoice numbers and you can put them over into an accounting software package so that then you can manage the full company financial picture. The story happens in both places. You're just moving the information. By doing that, then we can measure and know where you are at all times. If all you're looking at is your numbers at the product level, you're never really looking at what it does at the company level. You could be blindsided very quickly. This also helps you pivot when needed. Being able to look at it helps you realize I'm making more money selling from this vendor, or I'm making more money when I do business this way, so I'm going to continue to do business this way. And you can pivot all together and decide you don't even want to offer something or some product or service. When you measure, then you have the ability to pay yourself without stress and pay your bills without stress, because you know when the money's coming in and you know where the money's coming out. You know what is on board to be received. You know what's on board to be paid, so you can make a plan. You also know how much money's in the bank. That's what the balance sheet tells you. So you know a full picture of where everything is. Just looking at those two reports on a consistent basis, the balance sheet and the income statement, the P&L. The balance sheet, it starts at the top, and of course it balances, right? But it's going to show you how much money is in the bank. So if your bank accounts are tied to your financial system, you're going to be able to see that. You're also going to see how much is in your receivables. How much are people expecting? What invoices do you have out there that you're going to be paid? Then it's going to show you what you're liable for, what you have to pay. So if you owe anybody, if you have bills that have not been paid, you're going to see it right there. It's a quick snapshot. If you move over and look at that profit and loss statement, it is going to give you immediately information for whatever time frame you put in. Here's the money that came in. Here's my cost of goods. Here's what my gross profit is. Here are the expenses in that time frame, and here's what I have at the end. Just those two. They may not give you every single picture, but I will tell you it will give you 95% understanding of where you are and what's coming and what's ahead of you. And that's why most financial people ask you for both. I'll tell you, most of us, though, don't even look at the balance sheet. We don't know what to do with it. If we look at anything, we look at that income statement. But you need to learn to look at both together to get the full story. Otherwise, it's almost like getting every other sentence and me asking you to fill in all the details in the chapter. You can't do it. So you have to be able to read and know both, which means the data has the flow correctly from Mydoma into that financial management software. All right, how to manage those expenses. You saw the difference between $18,000 and $58,000. How do we do that? So the first things we're going to do, just like I made a comment earlier on the cost of goods, we want to look for the best price while keeping our value proposition. We want to do the same thing here. We want to look for alternatives that are less expensive. I'll give you one that might be a little bit silly. Instead of bringing in bottled water, it might be better to have a water system brought in. Or it might be better to buy a filter and put it on your water so you can drink right out of the tap or right out of the fridge with filtered water. That's a whole lot cheaper than bottled water all the time. And those little things add up. Little tiny savings add up. Ask yourself when you're looking at these expenses, do I really need it? Do I really need it? And honestly, do I really need it right now? There are sometimes things that we need, but we don't need them right now. And buying them too early could put you into a financial crisis or a stretch that you really didn't need to get into. And so really think about not just when you need it, but when it's necessary for you to have it. Look at all of your expenses. When I have individual consultations with clients, we go line by line on their profit and loss statement, line by line. And we question all of it, not judgmentally as like you shouldn't have done it, but do you need that going forward? Is there a way we can work around that? Can we remove that? Can we not do it? What was happening here? Is it necessary to happen again? All of that makes you aware of how you're spending your money. The goal is to think strategically and frugally. I didn't say cheap. Right? I'm not talking cheap. I'm talking about conscientious spending. The goal, the same way that we would have a goal in our home to live under the means, right? So if we're only bringing in $100,000 a year, I would hope that your life expenses were less than $100,000. Well, the same thing for your business. If we're bringing in $100,000, we certainly don't want all of our expenses to be $130,000. That's not cool. That's not going to last. So we constantly have to be in this state of thinking of how can I spend less, spend less, spend less. We'll tell you one of the traps in our industry, because it is such a beautiful visual industry, is to think that we need things for others to see that we don't need. Okay? It could be photography. It could be marketing. I'm not saying those things are bad. I'm not saying not to do them. Do them. But do them carefully. Do them with forethought. And make sure that if you're spending money, your company can afford to spend it. Okay? And then also realize that the more we spend in the company, the less we make to bring home to do something else. So now my thought process, even in my own business, is, all right, if I spend this, what am I going to get the return out of it? Or would I rather do that, or would I rather go home and take my kids to Disney? Because the money's flowing through to my house if I don't spend it on that. So, sometimes it flows through, sometimes I spend it because I'm looking at it strategically. And you get to do the same thing. You need to look at your expenses at a minimum every month. And I don't mean look at it like I talked about earlier and checking off the box because you looked at it. I mean, look at it, measure it, set some very strong, detailed goals for your financials, for your profitability numbers. Remember, those numbers are just showing you the string of choices before them. That's it. They're just the outcome of all of your decision making. And so we can give a number that shows us if we made really profitable decisions in our business. And that's how we want to look at it. So we want to set a goal for our amount, an amount for each month, and then measure to that goal. Some of my clients, we measure things like what was the percentage of cost of goods that we want from total sales. We look at our gross profit margin. We look at how we're going to take that net profit and divide it out into company profit and salary, maybe retirement accounts and taxes that are owed. We look at expenses as a percentage of gross profit or real revenue. And we do it for the whole year. We break it down by quarter, and then we break it down by month. And then we can measure to that all the time. So again, let's wrap up here and talk about why profit. We want to profit again to cover our tax debt, to create and maintain happiness, to have a sustainable company, to grow the company, to have great service, to spend more time, to sleep at night and reduce stress. We just need to keep that in mind. And I want to tell you, so I've talked to you a lot about what to do and how to manage and how to form this part of your story. But I want to tell you, because a lot of times people are telling me they feel a lot of shame around this aspect of their business. And I understand that because I felt that too. The whole thing, I think I told it in the very first webinar that we did. I told you a little bit about my story, and I lived with shame that I'd run large companies and done that, but I had not really put those things into practice in my own company. And that shame keeps us locked. It keeps us stuck, and it keeps us from reaching out for help or for doing things differently. And so I just want to say to you all right now, yes, you're creative. I know you're creative, and it does not preclude you from being able to do numbers. As a matter of fact, you do numbers all day, every day. You do it with floor planning and space planning. You do it with measurements of what you're purchasing and how many yards of this and all those things. So you use numbers all day long. You can use those same numbers and learn to put them together differently so that you can manage the finances of your company. So even if you've never done it, even if you are creative, even if you hate numbers, even if you don't know where to start, even if you're new, and even if you've been in business for 30 years, it's never too late to do business better. And I want to tell you just real quickly something that I have available that will help you if you want to look at it. I have an online course called Understanding Your Financials, and I put over here to the left. This is not scary. I know it seems scary. I had somebody tell me the other day, gosh, when I even look at that, it just makes my stomach hurt. I'm here to tell you it doesn't have to make your stomach hurt. It literally can empower you to do everything you want to do in your company. And so it is an online course. There are 7 modules. You can see them here. We go through that P&L statement. We go through that balance sheet, and I teach you all of what it means, the difference between cash accounting, accrual accounting, an accountant, a bookkeeper, how to read the numbers, what they mean, how they work together. I'll teach you how to create a financial plan, a company budget, how to set goals, how to manage your cash flow, how to monitor what to look at, and then how to push through and look at it on taxes. Now, these are U.S. taxes, I will tell you that. Maybe I can work with Sarah and find out how it looks on the Canadian taxes, but for right now, it's U.S. But I'll tell you, even if you don't do that piece and part of it, what is so cool about this is it's online. You can watch it all you want. You can stop it. A couple of the people that have been through it told me they loved it because they could go get out their own documents and look at them and start and stop and start and stop and do the calculations. So that they're downloadable worksheets, downloadable Excel spreadsheets, all of it's there to be able to help you do it. I think the best feedback I've gotten from this course is somebody told me this morning, she emailed me, she's a private client, and she said, Michelle, I don't want you to do a monthly analysis of my numbers. Now that I've gone through this course, I want to own it and do it myself, and I'm actually looking forward to it. And oh my gosh, that was exciting because that meant that she was going to own the next chapter in her book instead of me, reading it to her. I'm not the audible version. She is the author of her story and is going to be able to write the next part. So if this is something that you're interested in, you can go either to my website and hit the Understanding Your Financials course. You can hit it across the purple line at the top of my website that says, hey, do you want to pay yourself? Or you can go straight to this URL. If you do choose to purchase the course, you can use the discount code Mydoma10 and you'll get 10% off. Okay. All right, Sarah.
That was amazing. Honestly, to the point, easy to understand, but also like a real actionables. These are things you can go do.
Right.
And I just have to butter you up some more because I also it feels very empowering. I was putting on my designer hat, listening and remembering feeling like a lot of people probably are watching this, just a little lost and not understanding. And, I kind of wish I had met you, that many 10 years ago now, 8 years ago now.
I hear that a lot. Yeah, I get that a lot. Where were you?
Yeah, where were you? Because that would have been really helpful. Whereas I was good at managing my processes, I was like many other designers. It's difficult to do the financial piece if you don't have somebody to help you explain it. So thank you. This was really, really good.
You're welcome. You're welcome. I love that when they come back and they go, oh my gosh, I understand this one piece. Okay, now I understand the next piece. And let's be honest, running a business, especially one like this that can be run with one or two people, that there's a lot of work to be done. So it's learning the processes of the business, learning how to do good design or great design, learning how to market, learning how to have customer service. And now you want me to do the financials, at least to understand them. It's a lot. It really, really is.
Well, I think we'll wrap up here, and we'll be taking other questions afterwards if you guys have them. But thank you again, Michelle. This was really great.
You are welcome. Thanks for having me.
Of course. Thank you.